Welcome to episode number 3 of Live Nation Urbans Presents The Souls of Black Folk. Today we're going to be discussing economics. I'm super excited because I have two, esteemed colleagues that we're going to be speaking with today, both from Morgan Stanley, representing different divisions. One is Ted Reid, and the other is Alice Vilma. So we're going to start with Ted, and then we're going to speak to Alice after our conversation with Ted. But again, economics is such a vast and a very it's a very wide range of topics that we could discuss when we talk about economics. So we're going to focus on a couple of key things based on their levels of expertise. But I do want to have a second conversation in the upcoming weeks to really dive in because I think it's super important to discuss, particularly with everything that's going on right now. So I will see if Ted is on right now. Thank you all for joining. I feel like the more we do these, more people join on quicker. We're going to get the D-Nice numbers one day, too. I'm not even worried about it. Okay, so it says, let's see if Ted can join. I'm waiting for Ted right now. Connecting. There he is.
Hey, what's going on, man? How you doing?
Wonderful, sir. How are you?
I'm doing great. I had a Teddy Riley moment for a minute. My other computer wasn't working, so the Wi-Fi cutting in and out. So we're good now.
You didn't even have to mention it. Thank you so much. Ted, if you can you give our listeners your exact title, please, and what you do at Morgan Stanley? Because I think I'm gracious that you're even making time for us today.
Absolutely, man. It's Senior Vice President / Sports and Entertainment Director.
I got you. So what does that exactly mean, and what does that entail on a day-to-day basis for you?
In its simplest form, I manage money for the majority of people I manage money for are in the sports and entertainment industry, be it talent, executives, professionals in the industry, and so forth.
Got it. So can you give, when you're talking about managing their money, what does that mean from, is that a day-to-day thing that you do? Is that their investments? Is that their, day-to-day?
So it's everything as simple as a basic savings account, to money market fund, to their investment portfolio. What I don't do is I'm not a business manager, so I'm not paying the bills and doing the taxes and that sort of thing. But anything that relates to helping them to build wealth is what I do.
So we're talking about helping to build wealth. And this is something that we've been talking about, quite honestly, for generations, going back to us supposed to be receiving, 40 acres and a mule way back then when there was a Freedmen's Bureau, et cetera, et cetera. So let me ask, do you have to educate a lot of the athletes and a lot of the entertainers? Because even when you say a money market account, I don't know how many people, that are even listening here understand what those things are and those mechanisms to save money and to actually grow your money over the course of years.
I would say a large portion of what I do is educating clients about different types of asset classes. I've taught financial literacy for a long time for artists, with a number of artists organizations. I was on the board of the Recording Academy and taught financial literacy there. I've done it with the NBA. I've done it with the NFL Players Association. So in a number of teams. So yes, a lot of it is about teaching financial literacy.
Got you. So let me ask the question: what does it mean when you're talking about financial literacy? I want to keep this as basic as possible, Ted.
Okay, sure. It's basically, and that's what I try to do, is take it down to its most simplistic form of, what is a stock? What is a bond? How do mutual funds work? How do all of these different types of investments work? And it really just comes down to a few simple things. It comes down to, with any type of investment, there's a trade-off between risk and reward. The greater the risk, the greater the potential reward. But I always say vice versa, the greater the reward, the greater the potential risk. And so to put that in basic, simple form, suppose that somebody had, let's say, $1,000 to invest. Okay. If they were to take that money and put it in a savings account, they'll probably at the end of the year walk away with maybe $1,001, given where interest rates are today.
Okay.
But on the flip side, they could take that $1,000 and buy all lottery tickets with it. Well, chances are they may become a millionaire, but the reality is they'll probably end up losing it all. And so it's understanding that and understanding people's level, their confidence. How much risk they're willing to take on is how we begin setting up portfolios. But that's the way I'm describing it to you now is the same way I would describe to any type of client, to try to break things down to its simplest form. I'm just a firm believer that, if you can't teach something on a 6th grade level, it's probably because you don't know it.
Right. So one, don't judge me on buying scratch-off tickets. They'll judge you. But two, let me ask a question. Someone just asked this here.
Sure.
How do you gauge risk tolerance for people? You know, I think there's a difference where, let's say I grow up and I may not necessarily have, you know, $5,000 that, you know, or that's my first $5,000 that I've saved. What do
Hmm.
you do? Like, how do you know, how do you determine as my, you know, financial manager, or financial consultant or wealth manager, how do you determine where to put my money to make sure that it grows in the most effective way possible?
I guess I'm going to ask you a lot of questions regarding comfort level with risk. Many times I may start off saying, okay, so on a scale of 1 to 10, where do you think you are? But then I like putting you in a real life situation where I may say, okay, suppose that you were in the market for a home
Hmm.
and you spent a lot of time researching this home. You felt very, very comfortable with this decision. And let's just say, for argument's sake, it's $100,000. I mean, of course, I'm sure real estate prices are higher, but just to use an easy number, if the value of that home fell to 700,000, how
Hmm.
does that make you feel? Does it make you nervous? Does it not phase you at all? Or would you double down on your position if a house across the street was listed for that exact same price?
Right.
And, you know, but that gives me sort of a feel. But those are the type of questions that I typically would ask. It gives me a real feel of where you are, because now I put you in a real life situation.
Got you. Well, Ted, let me ask, you
Sure.
know, that you spend a lot of time with artists and with athletes having to really discuss financial education, financial literacy, right?
Sure.
By
Sure.
the time they're 20 years old, 23 years old, older.
Hmm.
Why do you think these lessons aren't being taught when they're 6 years old, when they're 10 years old, when we could grow up with that foundation? And I'm particularly talking about Black and brown young men and women who,
Sure.
you know, do not understand how to grow and how to invest. I didn't know about investing money until my late teens. And even then, I was considered to know some of that early. That doesn't make
Sure.
sense.
I think for one, I think it should be something it's taught in the schools. You know, my kids go to school and are fortunate and go to school in Cherry Hill, and they were actually taught that in school. But most schools don't, and I think there needs to be much more focus on it. I was fortunate. I grew up in right outside of Philadelphia in a town called Willingboro, New Jersey, which I'm sure you know a lot of major producers that have come out of Willingboro. We like to call it Little Motown. But I had a teacher at 13 years old that taught me about the stock market. It was an American economics class. It was one of those things that I just became obsessed with.
Mhm.
And as a result, ended up buying stocks at the age of 13. I got fortunate. The first company I bought was a small company before they had legalized gambling in New Jersey called Resorts International. And I was hooked. But, you know, having that foundation, most of us don't come from money.
Right.
And so we don't have that exposure. You know, as kids, our parents didn't know. My parents were school teachers. Well, my mother was a school teacher. My father worked for the school board. And so they saw that I had an interest in something and started pushing me to go to the library and learn about these sort of things. But they didn't know anything about it. They were like most Black folks. They didn't know anything about the stock market. So I had to go and learn about it. But I do think that it's something that really should be taught at every level in schools. And you know, what I see is a lot of times, like you said, with artists and athletes, you know, you're talking about 19-year-old folks, you know, 18 and 19 years old, coming into the league, or all of a sudden, you know, their first album takes off, and now they've got this huge pile of cash,
Right.
but there's no idea of what to do with it.
Right.
You know, and so who do you trust when it comes to that? And you end up listening to what friends tell you to do, or other people who typically don't have money, and they end up making a lot of financial mistakes.
Yeah. And I would even say, you said you had an American economics class at age 13.
Yes.
I would argue that a lot of public schools today don't have anything near an American economics class. And so, you know, I want to focus more on more of the education. Last week we had Henry Hips here,
Okay.
worked at the Gates Foundation, you know,
Okay.
fantastic. I think that this is tied in, right? So lack of education,
Hmm.
it's a dearth, or that gap
Hmm.
between Black students and other ethnic groups.
Absolutely.
Then start, you know, as these students are attaining higher and higher, they're going into college, they're then getting great jobs, they're then able
Right.
to for their families, buy better homes, actually hire wealth managers,
Yeah.
and to repeat that cycle. Whereas this child may not have had that American's economic course,
Hmm.
doesn't do well in school, or isn't able to attend, you know, certain colleges that add certain prestige. They then have lower earning jobs, and then that cycle continues to go. Where
Yeah.
do you think, from a financial perspective, where can I start? What resources could I have if I don't have the proper education at school? What are those resources that I could have if I'm 13, 14, and my parents aren't telling me to go to the library? No
Mhm.
one's telling me to do anything. Where could I potentially go so that I could learn how to manage my money? Because I think when we're talking, for me, it's education and it's economics. If
Mhm.
I learn and I can save, I'm going to be able to have a better opportunity to win at life.
Sure.
So
Sure.
what can I do? Where are those resources you think? And again, this is just opinion based. What are those resources as a teenager that I could have to really understand financial literacy?
I mean, there's the simplest thing. There's a ton of audiobooks out there. There's a book that I've always recommended, the Wall Street Journal Guide to Investing,
Mm-hmm.
which puts things in very, very simplistic terms. There's a ton of audiobooks. One of my favorites, actually, a book that I read many, many years ago called The Millionaire Next Door, which
Mm-hmm.
basically talks about what the real American millionaire looks like. And it's nothing like what many of us picture,
Right.
the person driving the fancy car, living in the big house, and so forth. But that's where I would absolutely start.
Mm-hmm. So let me ask you, you talked about the big car, the big house, the status symbols, right?
Yes,
What I
yes.
also notice is that a lot of us, we tend to pay for certain things that we
Hmm.
need at the time. What are your steps and your recommendations? If we're talking about saving money right now, for those listening, what do you think we should do? Like, just basic steps. I don't want to go into wealth management or going to have
Sure.
just, I wake up in the morning and I want to save $10. What are those steps that I can take?
Okay, I'll start with very simple things from the time when I was flat broke and didn't have any money. Is I got in the habit of never spending my change. Anytime I went anywhere and I got change, whether it was pennies, nickels, dimes, whatever, I threw it into a cup. You'd be surprised how much money you actually save by doing it at the end of the year. There used to be a way where you could go to a machine and they didn't take anything from it, but I would use that as my vacation money every year. Get in the habit of creating a budget. Look at where you're spending money. This is a perfect time while we're in this quarantine moment and people are sitting home, and I'm sure most of the people on this call are probably spending less money right now than they normally do because most things are closed. This is a time to really sit down and evaluate, where am I spending money? What is important? What's not important? And get in the habit of paying yourself first.
Mm-hmm.
So when I say pay yourself first, well, I usually recommend that a person should put at least 10% of their income aside into some sort of diversified investment portfolio. But
What,
that money should,
what's a diversified investment portfolio? I just want.
it's the old saying, don't have all your eggs in one basket. So, I don't want to get into, you said you didn't want to get into a lot of details, but,
Yeah.
I would say traditional investments of stocks, bonds, and cash. Okay. But you should have a portfolio or a portfolio. Think of it this way,
Mm-hmm.
to put it in even bit more basic terms. When I mean portfolio, think of it this way: if apples and oranges and pears were different types of investments, you want a fruit salad.
Right.
Okay. And so, if you're buying stocks, you want to own several hundred stocks in your portfolio, not just one company. So put it into some sort of diversified portfolio. But I usually recommend at least 10% of your income you should be putting away. For artists, and I'm sure it's more creatives on this call than anything. For creatives, because your cash flow is not predictable, and because you could end up a time like now where things have slowed down, you should be putting a lot more than 10% away. You
Mm-hmm.
should, and if that's difficult, and for many it's difficult, do this: put 1 or 2% away.
Mm-hmm.
And what I would recommend is start very small and gradually. Trust me on this. Even when I was making $18,000 a year, I formed the right habits, which
Right.
were, okay, start at 1%, and then every quarter we constantly increase it. You will get used to it. You will find a way. You won't find the money missing over time. You'll get used to it and adjust your lifestyle. But yeah, absolutely. I mean, that's one of the most important things, is just get in that habit. That's how wealth gets built.
Got you. And let me ask you this. I mean, for those individuals that, and I think you touched on it a little bit, if I can't save 10%, if I'm not in the position to save 10%, that
Mhm.
at 2%, I just want to be clear, for those that may be struggling, you can still save that 1 to 2%. and keep that as a nest egg, because I know there are some of us that, they're taking care of their children, they're trying to
Sure.
live lives, they're not
Sure.
to even think about diversifying any type of investment portfolio. They're
Hmm.
honestly trying to buy portfolios for their children for the next year. So,
Understood.
I think that it's important what Ted was saying, that 1%, because that 1% or that $1, if you're saving that daily or weekly, that one will become 100 at some point. And I think that
Exactly.
it's important that even if it's a slow grind or a slow pace to get there, you're still getting there.
Yeah.
What do you think, Ted? I mean, are there any other tips or any other pieces of advice that you would give people, not necessarily artists or athletes? Um, and I'm looking at a question now.
Okay.
A single mom is thinking about how I can pay for my friend back for the diapers I had to buy, for that individual, because, we've been
Sure.
blessed with certain positions into
Hmm.
things in our lives. But for that individual, you know, does it make sense to save that 1%? Is there something else he or she can be doing if they're in that type of position?
Yeah, and I do understand that position. I personally have been in that position. Right?
Right.
We didn't get into my into my background, but at one point, even when I first started in the business, I was working two other jobs trying to survive, trying to figure it out. But as I said, you can form those habits early. Sometimes it's ordering lunch and not getting that bag of potato chips every day, or that cup of coffee at Starbucks, or it's little things that add up over time. And if you get in that type of habit over time, it may take longer than most, but the reality is over time, you'll be able to save money.
Absolutely. Absolutely. And let me ask, I mean, do you have, without saying names, any type of an
I,
athlete that, what you
I
say?
missed the last question. Sorry, you
That
faded me out for a second. Do I have any?
I should have put it on Do Not Disturb. I had a call just come in.
Okay. I thought it was me. Okay.
Any type of success stories, any artist or athlete that you've worked with that had very poor habits, and because they started getting into a rhythm or getting into the system of saving, now they're in a position where they're doing really great for themselves and for their families, because I think it's important to talk about generational wealth as well.
Yeah, I mean, I can think of a perfect example of a ball player that I started working with back. I hate to date myself, but late '80s,
Hmm.
um, who never came from money, never saw money before. Um, had a lot of bad habits in the beginning, but realized that and one advantage is that he thought that every year was going to be his last year in the league, which sometimes that's kind of helpful because it forced him into saying, okay, I've got to save money. I've got to save money. That player now is 15, 16 years out of the league
Hmm.
and still doesn't have to worry about money anymore. It was making the right decisions early on that put him in that situation.
Got it. Ted, can you repeat that last part? It broke up a little bit.
Okay, what was the last part you heard?
Yes, you said he was in and out of the league. I mean, not, he was thinking he would be out
No,
of here, and he wasn't. That part from there.
right. He thought he was going to be out of the league, but he changed his habits, made the right decisions, was very conservative with his money all along, and continued to invest the money over time. And so as a result, now he's 15 years out of the league, a little bit more than 15 years out of the league, and still living a very comfortable lifestyle.
That's awesome. That's awesome. And let me ask. I mean, this is just me talking to you.
Sure.
Let's titles. Let's take off. The friendship.
Yeah.
Why? Just overall, there is such an economic disparity between Black Americans and other Americans in this country. Did he
Well,
freeze?
the reality is we didn't. Can you hear me? Because we just froze.
I know. I was like, oh man, he don't answer. No, I was. Yeah, you froze, but you're back.
Okay, good. No, I said, look where we started from. I mean, we don't have generational wealth. We don't have parents who were able to pass that on to us. Many of us were in positions, like I said, where we didn't learn about financial literacy. We didn't even when we got money, and so as a result, as a culture, unfortunately, we get focused on symbols of wealth as opposed to real wealth. And the first thing, I mean, look at I use the Dave Chappelle example of when they got reparations. What's the first thing folks went out and did? And so I think one is obviously we many of us haven't had the opportunities,
Yeah,
as so many others. But then when we get it, it's we haven't learned what to do with it properly. And I'm not generalizing everybody. There's a lot of very wealthy Black folks out there who've done very well, but for the majority, it's been a totally different story.
absolutely. Any last pieces of advice that you would give anybody that, in different phases, to be honest, that may
Sure.
get into into saving, one, that has a little bit of money and doesn't know what to do with it, two, and those that have money, three different buckets that have it, they're already saving. Is there something else they could be doing with that money, or what they're doing is already good? So wants to figure out how to save, has a little bit of money, but doesn't know what to do next, and they're already saving. They're already working with the Ted Reid. Is there anything else they could be doing?
Okay. Well, one, I don't want to give a sales pitch and say find a great financial advisor, but I just did. The first thing is like I said, get in that habit of creating a budget, sticking with that budget, monitoring that budget on a regular basis, starting with whether it's the 1 to 10% overall. Make sure that what you're doing is diversified. And what I mean by diversification, by the way, I always want to emphasize that doesn't mean hire 5 or 6 different financial people and it's like going to going to 6 different supermarkets and buying the same thing at all 6 markets. Okay, it means that the investment portfolio is well diversified. Don't get into the habit I found with certain types of investments, that people basically only want to focus on one thing. For example, I hate to talk about asset classes, but many people I know that invest in real estate or invest in gold see that as the only asset class and don't have a diversified portfolio there. The other thing I would always say is, for those that have money, don't chase the hot thing. There's an old, I see us too many times, especially our folks, who, you'll hear about one great idea and want to put everything you have into this one idea, thinking that's ultimately going to blow up and you're going to become wealthy. It doesn't work that way. And usually there's an old saying that I've said for years, which is when the shoe shine guy tells you to get out the market, it's typically time. In other words, when non-investment professionals tell you that this is a hot investment,
Yep.
the money's already been made. Okay. But once again, don't always say, I've got to put 100% of everything I made. And we know of a few things that you and I have had discussions about. I'm not going to get into details, but
Yep.
we all know what was hot the last couple of years out there. I would just be very cautious.
Absolutely. So before you go,
Yes.
you mentioned some books that you recommended people reading. Can you just give those one more time? Because it's important I want people to hear them.
Sure. The Wall Street Journal Guide to Finance, and I think it's the Wall Street Journal Guide to Investments or something like that. The other one for sure is by Tom Stanley. It's called The Millionaire Next Door.
Okay. Cool. Ted, thank you so much. Thanks for making
Thank you.
time for Live Nation Urban and being a part of this, man. We sincerely appreciate it.
Thank you, Brandon. I appreciate it.
Ted Reid, Morgan Stanley, thank you again.
Hey, my pleasure.
Yes, sir.
All right.
All right. We have one more guest, everyone. Ted is off. Hello, everyone. I'm Brandon Pankey. We have one more guest coming up. Her name is Alice Vilma. She also works for Morgan Stanley in a completely different role in a completely different department, and I want to bring her on. Let me see if she's on. Alice, if you're on, just say I'm on right now or something. If not, y'all are all stuck with me for a good 5-10 minutes, and I'll probably ramble. Probably won't say much. What I will say in the middle of something very important is that today Live Nation Urban helped to launch the Roots Picnic virtual experience with Michelle Obama and When We All Vote. It's an incredible lineup. It's an incredible show taking place on Saturday, June 27th at 6 p.m. Eastern Time, 3 p.m. Pacific Time. Make sure you tune in to youtube.com and you can catch it on our socials and you can find out all the information you need to know. But it's important that we register to vote this year because it's that year for us to definitely register to vote. So let me see if Alice is on. I did my cheap plug for a minute. Let's see. Her is definitely on it. Her is definitely on it. Hello, Janine. Shout out to Janine McLean, who is a part of Hers Management. If you want to know the guests, we have her. We have Little Baby, Roddy Rich, G Herbo, Polo G, SZA, Earth Gang, Music Soul Child, Kirk Franklin, D Nice, and I'm missing a couple of others. We have appearances by Kerry Washington, Janelle Monáe, of course, Mrs. Michelle Obama, our forever First Lady, Dion Cole, Ghetto Gastro. Taj, let me see. I'm missing a couple others. It's so many. It's so many. And I don't want to mess up or miss out on anyone's name. So just make sure you tune in. Saturday, June 27th. Shout out to the Roots and the Roots Picnic. I'm going to check on Alice right now because I will just keep on rambling. Okay, Alice just sent me a message saying that she's going to be on at 6:30. So we have 3 minutes. If anyone has any random questions, comments, or concerns that they would like to mention, please do. Um, we need to shout out to Chill Moody. I see him in the comments. Chill was a part of 2 of our Roots picnics over the past few years. Incredible rapper, incredible artist, based out of Philly. So shout out to Chill. We're not going to have Schoolie D. You are asking so many questions. But we're just waiting for Alice Vilma right now. And we appreciate everyone being a part of the Souls of Black Folk. This is a weekly series that we started 3 weeks ago because it was important for us to really talk about the issues, the systemic issues that have been taking place within Black America. We started with Mark Lamont Hill week 1, just to talk about what was going on in the general landscape that we're in right now. Then we went into week 2 with Henry Hips, who is deputy director at the Gates Foundation. And then this week we're talking economics with Ted Reid, who dropped some gems. And now we're going to have Alice Vilma in the next 2 minutes. So please don't go away. I wish there was a way we could have a commercial break, but I'm not going to disappear. If anyone has any other questions about my day or about life, let me know because I can definitely share those with you. If not, I'll just stand here and just keep rambling over and over and over again. So Alice will come on, and just so you know the history of myself and Alice. Alice, she is a part of multicultural strategy at Morgan Stanley. And what we're going to talk about are really VCs and tech investments, because unfortunately, a lot of Black and a lot of brown startups and startup founders just do not have the same opportunities that others have had. And so I want to, I want to highlight that. Jason, great question, sir. Why did we decide to pick these 2 for this week? We decided to pick these because, when I think about what's important in Black America, I think about economics and I think about education. So I really wanted to start with those 2 because I think it's crucial that we can develop ways, or find out ways, to strategize about ways that we can save money, and that we can really, over time, together, collectively, build wealth, because that's important. Ultimately, we've lost out on 400 years, 401 years to be exact. The Jamestown settlement was in 1619. So we've lost out on 401 years of being able to gather wealth, even at times when we were promised to have wealth and to have opportunities to gain wealth and to gain access. And I think talking to 2 leaders within Morgan Stanley is important because it helps with wealth and it helps with gaining access, because I think that's what's equally critical in every sector that we're going to talk about in this series. It's really about access. Black people do not have access to things that other groups have. And quite honestly, it's unfair. And so I hope that coming out of these conversations that we can develop ideas and develop thoughts around how we gain access. You can meet some of these leaders and we can work together to be in a better position. So I'm excited and, really happy that y'all have stuck with me right now. Happy Born Day to Tupac indeed as well. I've got to shout him out since I saw him here as well. Next week, I haven't decided what we're doing yet, but we're going to continue this series, and we're going to continue this series in perpetuity for as long as we need to, because I think that we need to continue to come together. Just checking now on Alice's availability. I promise you she's worth the wait. Excited. Here we go. Alice is still on a previous call. She said, give her 1 more minute. She's deeply apologetic. I see a question here. I'm about to interview myself in 2 seconds. I don't see a question now. And I don't know, for those that have tuned in over the past X amount of weeks to this and our other series, Live Nation Urban's Meet the Execs and also Meet the Founders. I'm Brandon Pankey. I'm the Vice President of Business Development and Operations for Live Nation Urban. I don't know what my hobbies are. I don't know what my life is, but working these days. But you know, I'm excited to do this. I'm excited to at least lend a voice while we're going through a very, very critical time in our country's history. And even if it's to 100 people or to 1,000 people, if we can drop knowledge, that's what we're going to do. So I'm excited to be a part of this. So thank you all who listen, if it's this week or if it's every week, for making time out to do that. We're going to get on. Alice is coming on momentarily, so I'm just waiting for her. Thank you for saying the content's been dope. My IG handle, let's see. My IG handle is Brandon_Pankey. And yeah, just go on there whenever. I'm not pinning anything, Jason. I'm not pinning it. If you missed it, you missed it. That's life as well. But I'm just excited to be here. We're going to start pinning the title of the series and our guests on here as well. Hey, Joni, I should have got some water. I didn't know. I had a good schedule. It was Ted, and then Alice would pop right on. What exactly is Vice President of Business Development and Operations? That's a great question. What's my role? My role really within Live Nation Urban is to help develop events and platforms in business and hip hop, R&B, and gospel. And so over the course of 3.5 years or so, you know, we have developed a ton of platforms ranging from the Roots Picnic to Broccoli City Music Festival in Washington, D.C., Exodus Music, Expo, Arts and Music Festival in Dallas, Texas with Kirk Franklin, Rap Caviar Live with Spotify, a lot of partnerships, a lot of festivals that we've done. My role is to help cultivate those businesses and partnerships, and then also for the shows to make sure that they run smoothly from the moment we book and the moment that we actually go on sale until the moment that we're actually on site at the show, and to make sure that we have amazing shows. And so I'm excited about that as well. Thank you, Majima, for mentioning that. Shout out to Majima and Spotify, who also I have a great artist, Brianna Cash, who we need to talk about, but that's another story. Why are people trying to kill the word urban? That's a great question. So for me, urban means black, right? And so, you know, whether we call ourselves Live Nation Urban or Live Nation Black, at the end of the day, we are giving rise to black culture. And so, you know, whether you use urban or whether you don't use urban, I think it's needed within these systems, because what will happen is, in my opinion, is that we're going to become homogenized. And so if it's just, and I'll say it, Republic Records, and there is no urban, then all of a sudden that department that was there to build and to cultivate black music, to work with companies such as Live Nation Urban, and to really grow and foster these artists, they're going to disappear. They're going to dissipate, and those artists are not going to get the same opportunity. And if they get an opportunity, their deals are going to be cut even shorter than they are now. And so I think it's important that we keep that title, that urban title, whether it's urban or whether it's black or whatever you want to call it, we have to keep it. And so I don't know why people are trying to kill the word urban, but they've also tried to kill the word black over the course of 400 years, and they won't do that either. So there it is. Alice is coming on. I swear she is. She is so worth the wait. I'll sing for you. In a moment, we're about to do karaoke in 2 seconds. I don't know what's about to happen, but we got to do something. But Alice is coming on. She's in a board meeting. When you are a senior exec at Morgan Stanley, these are the things that happen. And she's going to come on momentarily. I'm going to check a text one more time. No one's doing comedy, man. No one's doing comedy. All right, she's coming on. I keep saying she's coming on momentarily, but here's what we're going to do. Here's what we're going to do. Here's what we're going to do. I'm going to, if you guys don't mind, I'm going to bring Ted Reid back for another 5 minutes or so. There's another question I did want to ask Ted, but I wanted to get off and respect Alice's time. If that's okay, we'll do that. And then we'll and then we'll end for the day. Alice will be back if she cannot make it, because I do think what she's talking about is super critical and super important. Live Nation will be live um, when all of the states and legislation allows us to be back into live venues. But we're going to be creative. We're already being creative. You'll see on the Roots Picnic virtual experience on Saturday, June 27th, just what we're doing to try to amplify the quote unquote at home experiences. So we're going to slowly get back into it. My hope is that it's this fall, definitely by 2021, but we're going to get back into it. We'll start at small venues and then grow and scale from there. So here we go. We're going to bring Ted back for 3 minutes or so. I have one more question for Ted. It'll touch on a little bit what I wanted to talk to with Alice, but she is stuck in a board meeting. And here we go. Let's bring Ted back for 3 minutes. We're going to ask one question and then we'll go off. Thank y'all for sticking with us so long. Ted, let's go live. Ted.
Hey, sorry, Alice is tied up, but you know that's what happens when you're a big player.
Absolutely. So no, what I wanted to talk to Alice about, and I'm just going to make it one question, and then we're going to wrap up for the night. But with Alice, you know what she does in multicultural strategy is she runs an accelerator.
Yeah.
And really, what that means for everyone listening is there are a ton of startups that need seed money. Seed money meaning they need money to actually start up their business. Keyword startup.
Right. Right.
So they work with larger corporate institutions or sometimes family offices or other angel investors, meaning if I, Brandon Pankey, one day had $1 million and I wanted to invest, you know, 20,000 in somebody, I would be considered an angel investor. But in this case, Morgan Stanley is a corporate institution, and Morgan Stanley provides startup money for individuals and for companies that want to start their business. Excuse me.
Sure.
Thank you so much. It's the Morgan Stanley Multicultural Innovation Lab. And so that particular lab for minorities and for women to build diversity in startups. Morgan Stanley provides money. They also provide resources. They provide office space, and they provide opportunities for these startup companies to meet other individuals, other high net worth individuals, so that they can raise money for their companies. Because it's definitely more difficult if you are Black, if you are brown, if you are a woman. Ted,
yeah, don't worry, I got a backup plan.
Alice is in.
There she is. Well, I'll ask her okay, I'll bounce off.
Alice is in. Thank you so much, Ted.
Ted,
I was about to ask you, but Alice is here.
You got it.
Okay. This is probably the most fun live I've done. I might just do one by myself one day. You never know. I'm adding in Alice Vilma right now.
So sorry. I am so sorry.
No, we got 2 minutes, right?
I know. I'm so sorry. We'll get it all out in 2 minutes. 2 minutes.
No. Alice, quickly, can you tell everyone your title, your role, what you do on a basis for Morgan Stanley, because it's so important, especially because you are a powerful Black woman doing things at Morgan Stanley.
Thank you. So I'm a managing director and I run the Multicultural Innovation Lab at Morgan Stanley. I heard you talking a little bit about it, which is cool. It's an in-house accelerator where we are investing in companies with a entrepreneur who is multicultural or a woman. And we're looking at tech and tech-enabled companies that are startups, so very early, Series A and before, so seed and Series A. And we invest what we call content, capital, connections, content being a couple $100,000 for a small percentage of your company. Content being curriculum, that's about 6 months long, that helps you learn everything you need to know and refine everything you need to know about your business. And then connections, both investor connections and customer connections, which is exactly what early stage entrepreneurs need in order to accelerate their business. And so we're helping you accelerate your business and keep and grow your business through this type of access that these entrepreneurs typically don't get. So thank you for having me. Very happy to be here.
Absolutely. Quickly, just so, for those that may or may not have the knowledge, what exactly is seed fundraising? What is Series A? Just so we can get the basics out before I ask.
Yep. So when you start a company, generally you have, and I'll go even before that. So you start a company, have this idea, it's super great. I know I have a market for it, but I don't really have the funds to get it done. Well, what I'm going to do is go to friends and family. And I'll raise maybe $100,000, maybe $200,000. We'll see, how generous my friends and family are. But I will do that to get my concept off the ground and see that there's a market. It kind of makes some sense. Everything kind of works. And that's what I'll do. Then once I notice that I've got some product market fit, got more customers coming on board, etc., I may raise what's called a seed round.
Okay.
And that can be anywhere between, call it $500,000 to $1 million plus. And it means that I have some traction. I've got some paying customers. I have folks who are interested. And now I'm trying to think about growing the business. And so that's what a seed round is. And then when you get past that, you start ready to scale. You're ready to take on significantly more capital. You may raise a couple $1 million. And that is what we call Series A. And that's typically when you have an institution like a VC or an angel group who are high net worth individuals who will invest in your company come in. And that's when your company's starting to show some scale. But it's not quite done. You're not quite done yet if you've raised $1 million or so, but you're certainly on your way. And that's where we come in.
Got it. A minute, because I think this is what's critical, this conversation. You talked about the friends and family round. You might raise $100,000, but Alice, I know a bunch of people who don't have the friends and the family to even raise the $100,000. So what if I have a great idea and I don't have that first round of funding available to me? What do? I created a business plan. I have the idea. I conceptualize it. I know it's going to work. Where do I go if I don't have friends or family that can provide that sort of access or money for me to have this business grow?
Well, typically where you're going to go then is to look at other programs, incubators, potentially accelerators, but generally incubators who will say, okay, here's your idea. There's grant money sometime that's around. There's also very early stage, 50,000 here, 25,000 there. You may enter a pitch competition. You may go get a grant from a university. And there are different networks now, especially now, that are available for early stage entrepreneurs, an idea and on a sheet of paper with a really smart person who's willing to execute against that. That's where you can go find that money. And then you have a little bit. So then you're like, okay, this is kind of working. This is working. Then you go to what you would typically be an accelerator. If you don't have that friends and family, they'll typically be the ones who will step in for that friends and family round that you're looking for the most part.
So let me ask another question. Why is the Multicultural Innovation Lab even needed? Does everyone not have an equal playing field to get money, to get access to these funds from a Morgan Stanley, the corporate institute?
Yeah, the answer is no. And that's exactly why we were created, or why we created the lab. The idea here is, and this is not a secret, but in terms of every dollar that goes to venture capital, and that's what this early stage funding is, kind of funding new ventures. For every dollar that gets invested, less than 1 cent goes to founders of color. And to be honest, depending on what you read, maybe less than, maybe 2 cents, maybe 4 cents, etc., goes to women. And so obviously, if you can't get the early stage funding, then you can't grow your company, or you can't grow your company at the rate that you would need to get more capital and to attract venture capital investors. And so that's number one. So the capital is very, very important, but also it's the access. So just because you get that first dollar of investment doesn't mean that you have enough to keep going to really get this product off the ground. And some companies, you actually need to spend a lot more before you see a dollar back, but you need to grow. And so if you have customers, but you're not necessarily profitable, again, you need funding to help push the company along and accelerate the business so that you can get to a place where you're profitable. And so that's why the lab got started, to be able to provide more of a level playing field and close this gap that exists in this early stage opportunity, so that founders of color and women can grow and create and grow the same businesses that their counterparts do.
Let me ask another question, because I've actually seen this, I've witnessed this, I've heard these stories. There are founders of color that not only have a business plan, but have actually started the business, may have even seen profitability from that business, have met with certain institutions or certain VCs, and they say, you know what, we're going to pass on this. While others, who may or may not be founders of color, will go in with maybe an idea on a notepad, or just an idea in their head, like, hey, this is what I want to do, given X amount of millions of dollars. Why is that the case? If we're talking about having access, and maybe the founders of color have the access, but they're still not given the same opportunity. Why?
Well, investors are different, and any particular investor may or may not agree with the business that you're putting forward.
Yep.
And so that's number one. So sometimes in order to get that $1 of funding, you might have to go knock on 50 doors, right? Maybe 100 doors. But at the same time, there is a thought that there's a pervasive element that's there that is less, kosher than we would like to admit. And I think that, quite frankly, if you think about the mechanics, if we want to believe that no one's malicious, right? That's fine. But when you think about the inherent risk that comes into funding a new company,
right,
because you can go to zero, a lot resides on how much you actually know the founder to be able to execute on that business. Right. And in order for me to kind of know that, there are a few things I need to know about you, or you need to be kind of in my networks. So I know you. If you introduce me to someone and say, you know what, this founder is excellent, she or he is gonna blow this business up, and here's why. I'm like, okay, I know Brandon pretty well. I trust him, so I'm gonna go ahead and meet that founder and take a stab on that founder, even if I don't know them personally. Mm-hmm. But if I don't know you at all, and you don't look like what I believe is the pattern that's in my head, and if I have to prove returns that look like the next dude's returns, I may take a pass on that. And that creates a system. And that creates a system that looks a lot more nefarious, if you will, than what people actually think on an individual basis. Yeah. And so when that system persists, you have to be able to come in and break that system up. And so, again, that's where Morgan Stanley comes in. That's where we say to ourselves, okay, we're going to put our credibility behind this. And it works, right? Because we get on, we meet other investors who say, you know what, Morgan Stanley's in on this. So there's a bit of risk here in terms of who this founder is that comes off the table. And we've seen it happen. And that's a testament to the work that we're doing.
So there's something I want to touch on before I ask you the next question. The first week we spoke to Mark Lamont Hill. The second week we spoke to Henry Hips with the Gates Foundation, talking about education. And now you. A common thread that I'm hearing is inherent bias. Just bias. Just what I already think you are as a business person, or as a student, or as a person in general. And that bias shows itself up in the workplace. It shows itself up in the classrooms. It shows itself up when you're on the street. And so I think it's super critical and super important that you are doing the work that you're doing. So because I had 80 other questions and I can't get to those questions right
now. I'm sorry.
No, stop it. You don't have to apologize. I want to talk about, because I think it's important for people to hear the wins through the struggle. Talk about some of the success that you've had with the lab, since its inception.
So we have been pretty successful, and I'm very, very proud of that. We've made close to 40 investments, and of those investments, we've had 2 acquisitions, which means we've exited, and so those companies have been acquired by larger companies. Mm-hmm. One was acquired while they were in the lab, and it was our first cohort, and we had a press release that said, we're doing this lab, we've got these companies, and a larger, well-funded startup came in and said, oh, this is interesting, let me take a look at this company, oh, I love their tech, and then they bought it up. That was really interesting, very, very surprising. In terms of the timing it took to get that type of attention, but not surprising at all in terms of the thesis. And the second company was a company that we introduced, a larger corporate that we introduced this company to, acquired the company. And again, proving out the thesis. And in terms of additional funding raises, we've had 2 additional funding raises, companies who had one who effectively tripled their valuation since we came in, and another one who's well on their way to doubling their valuation since they came into the lab. And again, that was a couple of years ago. And so again, We are pretty competitive, and that really is because the capital is always limited. That generally is the constraint. But at the end of the day, we are seeing, and that is the point, companies who, if you just look at the law of large numbers, could be better investments than some of the investments that have been made in the mainstream, VC community. Why? Because they're not looking at this particular market. Now, I think that some VCs, your largest ones, some of them who are starting to open their eyes to the whole game, quite frankly, they've said to themselves, okay, if the VC model is to look at the universe and pick the best investments, we are missing an entire sect of folks who, again, may have companies that are better investments than the ones that we've already invested in. And that's just because we don't know them. And so we're trying to open that up. And so that's where you're seeing a lot more VC bringing on Black partners and things like that, trying to open up that lens so they can pick the right companies.
Got it. So if I had a startup or if I had a business that I would want to be a part of the accelerator, how would I be a part of your lab?
So shameful plug, not so shameful, www.morganstanley.com/MCIL. We will be opening applications soon for our next cohort. We're actually looking to expand our activities. So we normally take about 10 companies. We're looking to expand that now with some of the success that we've had. And over the next year, we'll look to do, we'll probably look to double that. And so very, very excited about that. But that's the way you will learn more about our program. You can send us an email and get on our mailing list, and then we'll be in touch with you from then. I love meeting new companies, and so does the team. So we are always open for business, and we'll be open for business shortly.
Awesome. Alice, if I didn't have to jump off and go on another Zoom, I would stay on with you, but I have an idea of how to bring you back in a different capacity, because I think the knowledge that you have is incredible, and you're one of my favorite people in the world. Thank you. Thank you for coming to be a part of this.
Thank you for having me.
Absolutely. This has been episode 3 of The Souls of Black Folk. I'm Brandon Pink, Live Nation Urban. We'll be back next week speaking about a different matter within the community. Everyone take care.
Good night.